Hey, Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I just want to go over the stock market and the setup on Bitcoin, just because I think today is going to be important for understanding the direction of Bitcoin. There could be some limitations on the chart. So let's just quickly go over and just let me go ahead and show you what I've got here. I've got basically the Keltner channels and the mean reversion indicator, right? So if you want to look at just the Keltner channels with me very quickly on the daily, you can see that in this blue band, basically these three blue lines, we are at the top of our Keltner channels. Now that would suggest that perhaps we are due for a pullback pretty soon. I mean, it's rare that we break out of the channels. Obviously, we do on extreme moves, but if we're not having an extreme move to the upside for whatever reason, perhaps just some type of just insane squeeze play, then there's a good chance that we could have a pullback before perhaps continuing upwards as these channels curve up with us, and that would just maintain the continuation of this band, sort of like how we do it here, right? Like just push up to the top of the band, pull back, maybe have a drop, push, 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 and then you get higher, right? And you can see maybe we wick outside of it, or just have a couple few closures outside of it, but we quickly re-enter. And so if we do break further above, I would just suggest that it isn't going to be for too long before we come back to the center of our Keltner channels on the daily. On the weekly, it's a little bit of a different picture. On the weekly, we have a lot of room to run all the way to 30,000, and we are still in an extreme posture. So this is one reason why you wouldn't be too confident that you were, kind of at a mean reversion point in the previous drop that we had. But when we dropped to, 17,500 and we just broke out of these Keltner channels, there was a good chance that on the weekly we would need to have some type of correction, at least to get back into the band. And so, these different tools can, improve your trading. And, had we just been trading along the bottom, that would have been ultra bearish, right? Just like if we are trading above the Keltner channels on the weekly, it's ultra bullish, right? But typically we trade within them. And so the fact that we broke back into our channels, it does suggest that we're probably going to meander our way back to the middle. And so the center of this channel is either going to come to meet us, or we're going to go meet it, or both, and we meet in between, perhaps at like 26,000 bucks. Going back to the daily, you can see that that $26,000 area is pretty important for this yellow line with the purple bands. Just ignore the blue ones now. And this is our mean reversion channel, essentially. So if you want to just understand like how we return back to an average price, this tool can give you an idea of what that might look like and where the mean might actually exist at any one moment. And for this, I can see that on the daily, our mean is approximately, it'll continue to drop, but it's approximately 26 to $27,000. And so if we do just a mean reversion, we could get back into that area and meet it somewhere around perhaps $26,500. And if we overshoot, then of course we'll probably pull back into it because it does have a downward trajectory. On the weekly, I don't want to frighten you in a good way, but of course it is saying that we are quite stretched at the moment, and so a mean reversion could bring us all the way to $41,000. Now, that's not a call that I'm making. That could take actually months and months for that to play out because we are on the weekly. So just uh, you know, uh, take these things with a little bit of grain of salt, and also understand that we haven't touched the bottom of this mean reversion curve, which is actually sitting somewhere at negative $9,000. So there are some extreme distortions that this curve may have at the ends, but primarily we just want to focus on the yellow band, which can give us just an idea of how the math is playing out. And I think for the daily, it gives us more of a realistic perspective than when we go on the super high time frames. Okay, just popping a note about that because some of you might try it out, but don't be misled on those higher time frames. You're going to distort your view. Since this is a workshop Wednesday, just wanted to introduce you to a couple tools that I occasionally take a look at to see just how extreme we are. Of course, there are an infinite number of tools in the indicators panel on TradingView, and so you can try them out, one by one, and maybe you'll find something that's interesting. And if you find something that's interesting, you can post about it in the Alpha Commission Discord, where there's a link in the description below this video, or you can type a note in the comments of the video and just share, what tools do you like to use? What tools maybe you would like to be introduced to on one of these workshop Wednesdays here at Alpha Commission. Guys, back to the charts here. Let's go ahead and just take a look at the lines that I have drawn out, because this is going to tell a little bit of a bigger picture, especially since tomorrow is going to be pretty important. Okay, so please understand what I'm trying to tell you here, which is that effectively, if we're above 22,400, we're probably still in a bullish posture. Ideally, we would like to keep above $23,000, but as long as we're above 22,400, we have a lot of the oscillators, a lot of the momentum oscillators, in our favor, in the sense that momentum is going to be going in the upward direction. Of course, we can wildly swing, and there's technical support and resistance, but what I call support is when we start to break those indicators. When those indicators start to break down, and the more of them that break down, the more likely the chart is just going to break down. And since we're trading pretty much on the daily, I'm just throwing out the dailies and then also a couple of the 12 hours just to give us a sense of what the next half day might be like, right? And so for the next half day, we're really staying bullish above that 22,000, let's just say $400 area, which is really corresponding with our 200 MA on the weekly, so the weekly 200 moving average. And underneath there, things start to get pretty dicey, and you really don't want to lose that. Let's just choose the middle number when we talk about these. You don't really want to lose 21,200. A couple of your indicators are just going to be pointed in negative directions. The momentum is just going to build up to the downside. And while these might be good entry opportunities, as long as you don't break below, 20,500-ish, 20,700-ish, you could perhaps score a good entry for perhaps the next lift off. And that's why I call this a support area, because assuming that we don't break this area completely, we do have the opportunity to return to a bullish posture. But ideally, you would like to do that before the first one breaks down. So ideally, your entry is somewhere around 21,500, and you're just kind of getting a lift off from there. And hopefully, just in general, the chart stays above that $22,700 area. So that's it for Bitcoin basically. You can see that we are entering in that very dicey area of 24,000 where we do have the weekly 9 EMA, and getting rejected from that would be it would be, in fact, a pretty big deal. So if we can go ahead and turn our EMAs on, what you can see is that on the weekly, switching over to the weekly, whenever we're on top of the 10 EMA, we're very bullish, right? And whenever we're underneath the 10 EMA, which is the red line, then you can see that we're very bearish, right? So, it may be a little bit difficult for you to see, but basically, if I zoom in here, you have these red lines. When we're underneath them, it's bearish. But when we're above them, it's bullish, right, on the weekly. And those are those really, really big moves. So the fact that the 10, basically the 10, the 9, I use the 9, but you can use the 10. Most people use the 10 EMA. The fact that the 9 EMA, the 10 EMA is right there around $24,000 suggest that if we break through there, we have the very real chance to have a bullish macro uptrend. Okay. Now, we occasionally break out of that and then we get pulled back into it. And I think if you look at it on the monthly, you can see we're just kind of like poking through the monthly. So it's not the final say. You really have to get a couple candle closures in a bullish posture. It can't just be, one candle or maybe just two candles, and an indecision candle or something. It has to be a pretty good posture. But the fact that we have the 20 EMA on the weekly right there, and also the 200, we could get a really crazy squeeze play to the upside if we're able to chop around in this region for a couple weeks and then get a squeeze to the upside. It could be a massive, massive play. And, I don't want to project a height, but it could do that. However, if we just get kind of like a modest pop-up, right, a modest one, then really we're probably looking at, this 200 EMA being our limiter. We're over the 200 weekly MA, but then we have the 200 EMA right here, around 26,500, and that could be a limiter. That corresponds really nicely with this candle right here, this breakdown candle, which is also right there at 26,500. And then there are, EMAs. There are a bunch of other things that are kind of pointing, that 26,600, 26,500 is going to start to be a pretty dicey area in terms of a potential rejection point where we just get slapped down. And then we don't really get to put in that bullish formation. We get kind of slapped down from there, perhaps, right? Sort of like we got slapped down over here at the 200 MA on the daily, over here, but just, perhaps it could be the 200 EMA weekly that slaps us down. So we're going to have to find out. There's also a lot of resistance in the $28,000 area, right? When we start getting above there, when we start getting into that area, there's just a lot of, a lot of wicks, a lot of kind of choppiness that could potentially just slap us down. And so, we don't really expect to just push through that, like a hot knife through butter. There is a good chance of getting rejected in this entire area up here. But the first boss that we're going to have to defeat from this point is going to be that 24,250-ish, and then 26,500 to approximately 27,000, somewhere in that area that could be a really big challenge for us. And because we are getting a little bit overheated on the daily, let's see, our Stokes, this is still going, but it looks like it's starting to round, right? Starting to round a little bit. And definitely our directional volatility is getting overheated. And we are having a little bit of a warning here, are getting a little bit oversold, entering that kind of oversold area. There could be a chance for us to potentially get slapped down around a 24,000. And we also have this nice, beautiful, it's only halfway through the measure today, but we also have this nice, beautiful indecision candle right here. So, when we've seen these types of candles before, they often lead to reversals. So this could be a point where we get some type of reversal, and that's when we would really want to hold above that $22,000 area if we're going to push back up. And we wouldn't really want to be breaking this area because that would suggest some very serious weakness in the charts. But either way, if we have a pullback, it could still be an opportunity to buy back in, especially some of these, well, yeah, I guess above 21,500 is still actually all of these levels. Yeah, I mean above 21,200, really the middle of this one. As long as we're, still just poking down in the middle of this thing, this whole range is a pretty good buy zone if you're bullish right now, right? And so you could take some risk and just keep your stop losses pretty tight. But just understand that if we don't just rocket up, there's plenty of reasons why we have EMA resistance here, um, and oftentimes we don't break through EMAs on the first try. And, although we're bullishly postured, there is a chance for us to just be a little bit overheated right now. The market may want to cool down. And there also may be reasons on the stock market that we could cool down. Let's just go ahead and take a look at the dollar really quick. The US dollar does seem to have found support on the day. Let's pop down to the 12-hour. Yeah. So it's finding support. And if this continues to break down, perhaps we could see as low as 103 over here. And 103, man, this would just allow for Bitcoin to go on an incredible run, okay? Bitcoin and stocks would just go on a very nice run if the dollar came down to 103 and then perhaps, continued its way back up, as opposed to just bouncing right here at 106. If the dollar starts bouncing up tomorrow, right, tomorrow morning, which is going to be Wednesday morning, then you guys should consider that there's likely to be a pullback, a pretty strong pullback. But if the dollar is breaking down, then that's going to be a little bit easier conditions for the market. So pay attention to where the dollar is. We're right on this, this interesting support area right here. It's not that strong, and so it could potentially break down to 103, or maybe 105, 104 at least, and just give us the energy to have a little bit more of a run on stocks and crypto. Going along with this, we also will want to see the VIX, which is the volatility index for the S&P 500, to also break down because both the dollar and the VIX, when they're high, they suppress stocks and crypto. When they're low, they give us easier trading conditions. And so this is a weird formation. We did break out of this kind of indecision triangle to the downside, but then we popped back in. We're breaking down again. Are we going to pop back up or are we going to continue to break down? Right now, it looks like there's a good chance that we break down, and maybe we're gonna and try to approach this trend line. And so maybe this trend right here is no longer applicable. Maybe we're really talking about this kind of a wedge now, and hopefully, as soon as we break through these wicks, we can get a little bit of a drop to 21 on the VIX, and that should allow for easier trading in stocks and crypto. And if the dollar is also coming down, and if the VIX is coming down, that's just going to be very good trading conditions. Okay, just to be aware, the dollar is finding a little bit of support right now. And so if it does bounce up, and also if the VIX decides to use these wicks as support and starts to turn up, then that could be a bad thing. But if it breaks down, just pay attention to the VIX and the dollar tomorrow. They're both at this critical juncture, and the direction that those two things go is going to depend on whether is going to determine if we have a headache tomorrow or if we have an easy time tomorrow. Okay, so I don't always talk about stocks, but these kind of key moments are important. And then let's quickly look at the VXN. Yeah, same thing as the VIX, okay? So we don't need to just repeat ourselves, but basically the same setup as the VIX, and the VXN is just for the NASDAQ, right? So same thing, basically. If we go over to the NASDAQ chart, we can see, let's see, let's go to the daily. You can see that we are bullishly breaking up above this kind of accumulation wedge that we have going on here, which would suggest perhaps a measured move to our trend line. Let's hope that we can actually get this summer relief rally, right? Maybe this summer relief rally is really game on, and it's looking pretty good. So we got past that kind of two, basically that 295-ish area. But let's see here. Hmm. I mean, I see no serious issue. We could continue. Could it be a little bit overbought right now for our EMA on the daily? Maybe we could have a pullback, a little pullback. So probably nothing too serious. I'm leaning in the direction of bullishness right now. If I just look at this, maybe if I go to a smaller time frame, can I see something else? Yeah, I mean, there's a chance that we could lose this. Let's see the NQ1. Are there any serious gaps here? Get rid of these EMAs. Not really seeing anything too serious there. Let's see here. Oh, yeah, I should be on the QQQ. Let's see. Here's a gap right here at the 287. So we could have a gap. We filled this gap. See, this might have been a stretch up here. See, this could potentially have been a fake out where we just filled the gap, and then we're going to come back down to the wedge support and fill this gap, and then maybe we continue to be bullish. See, you got to kind of zoom in on some of these things. These smaller time frame gaps, they often get filled in on stocks. So just pay attention to them, because they can have serious impacts on how markets open and how they move the next day. So just my suggestion, perhaps this pump outside of the wedge was just a stretch goal by the market to close this gap, and there could be a breakdown to this level to fill this gap. And what you'd really want to watch out for is that if we drop to fill this gap, within a reasonable amount of time, like right when we open up, just be careful that we don't continue to drop down. So if the dollar is rising, if the VIX is rising, if the VXN is rising, and if the QQQ is dropping to fill this gap, there could be the chance for us to break this wedge to the downside, and this could have all been a fake out. And then what's going to happen is that Bitcoin is actually going to get pulled along with it, and that could end up making that scenario where I said 24,000 could be a rejection limit. That could make that possible, that we get rejected at 24,000, which is that weekly 10 EMA. And again, why is that so significant? Because if we get on top of the weekly 10 EMA, it's incredibly bullish for the macro, for the big picture of Bitcoin. But if we get rejected by the 10 EMA on the weekly, then that would suggest a continuation of weakness in this chart, even if we go sideways, right? And we could go sideways for months. So just be careful around this 24,000 on Bitcoin, and also be careful with stocks tomorrow, where potentially we're going to fill in some of these lower gaps if we start to break down, and if the dollar starts rising, and if the VIX starts rising. Let's double check the S&P 500. Do we have a similar story here? Sort of, sort of. Not really seeing anything that needs to be filled in here. Maybe I need to look at SPY. Yeah, for some reason I'm looking at them backwards today. Let's see. Yep, we do. Okay, so we do have a gap over here. We have a gap right here at 379. And then we still have this gap from back here at 370. And we have a little bit of a gap right here at 384. What the heck? So let's see. This has been filled in. This has been filled in. Yep. Now, I had been hoping that we were going to break through this area and fill in this gap. That was something that I was looking forward to us doing. But the S&P 500 hasn't filled its top gap. So NASDAQ has filled theirs, but the S&P hasn't. So we have a little bit of a conflicting story right now. NASDAQ will be tempted to go down to fill this gap, but the S&P is going to be tempted to continue to pump and fill in this gap. Now, if NASDAQ heads down lower, probably the S&P will follow, and then we're just going to be stuck in this kind of rectangle that we have here. This kind of rectangle that we have here on the S&P. So I don't know. I'm not sure which one is going to happen first. Are we going to go up or are we going to go down? But there is some temptation here to fill in these lower gaps, just these little ones. So maybe tomorrow it's going to look something like maybe something like this. It could actually work in our favor. Maybe we just drop down, we get good entries, make a higher low, and then we break out of these formations, fill in the S&P 500's upper gap, and this could be a pretty good game plan for tomorrow if we start to break down, and just understand that there could be, both on the NASDAQ and then also on the S&P 500, a potential lower high to put in. And if we lose that area, that's when you might want to bail out, right? Especially if we lose the support area on the S&P, because well, it may choose to go really low. Maybe that could be quite scary, actually. Yeah, I mean, this is this is a little bit of a scary drop here. Did NASDAQ have that? No, NASDAQ filled in its lower one. So I don't see anything too tempting on NASDAQ to fill in there. Nope, just this one. Yeah, anyway, we have kind of a gaps play tomorrow. Uh, if we rise up to fill this one and we start heading back down to fill these lower ones, that could be pretty bad news. I'd rather fill the lower ones, get a good entry, and then pop up, rather than pumping up here and then having the S&P 500 and the NASDAQ breaking to the downside. Just it's going to feel a bit bearish at the end of the day, right? So pay a lot of attention to what's happening on stocks tomorrow. I think it's going to be an important day. The dollar is going to make a decision. The VIX is going to make a decision. NASDAQ is going to make a decision in terms of whether they break up bullishly and hold that area, or whether they break down and chase a gap. And then, the S&P 500 has to choose, is it going to go for this upper gap, or is it going to go for these lower gaps? And then is it going to break support and go for the even lower gap and just scare the market like crazy, right? Like crazy. That could happen if the dollar and the VIX are rising. So guys, I don't want to spend too much more time on this episode, but that's how you can think about stocks and crypto together. Just understand that if we do have a little bit of a wild ride on stocks tomorrow, that Bitcoin could also go for a wild ride, and then so could your altcoins. And so you may want to take a little bit of profit and maybe de-risk a little bit, especially since Bitcoin is hitting that resistance area of 24,000. Now, there's nothing very specific on the charts to act as resistance. Even if I zoom out, there's nothing really over here, you know, that's so resistant. I mean, we do have some wicks. There's a wick here on the 5-day at 24,250. See if that's on the weekly. At 24,250-ish. So there is a potential wick, there is a potential like thrust to the downside that we could get around 24,250, approximately where the 10 EMA weekly is. And that corresponds to where stocks might be stretching to. So if stocks do stretch to the upside and the dollar and the VIX are headed down, then we could see Bitcoin, do this, come up to that $26,000 area, and then maybe get rejected as stocks turn around and then go for, their lower gaps, that the stocks may want to fill their lower gaps, right? Not sure why it's so hard to draw on TradingView. But alternatively, stocks could go for their lower gaps and then suddenly stop and turn around and go for that S&P higher gap, and that could cause Bitcoin and crypto to do something like this. Oops, could cause it to do something like this, which would be a fairly bullish play. We do have our channel that we've been carving out here, And since we did break out of the macro channel, there's no real skin off of our back to come back down here and find support on our macro channel. And then this would be just a brilliant entry in this kind of support area that I've marked out here, right? So if we're talking about, horizontals and, the dynamic support and resistances, one that we have here, it's not really horizontal, but it is a diagonal support, is right here at approximately 19,900. So if the market does stretch and just kind of wick us down there and kind of scare people around 19,900 over the next week or so, right? That could still be a pretty good entry in the long run. We could flash wick also underneath that support and then just pop back up. But really, I'd prefer if we don't break back into this macro downtrend. Um, but you can understand that it's possible that we could get smacked back into this channel and maybe all of our adventure up here above that macro channel was just all folly, right? So the market could basically have faked us out and see how long this channel is, right? 4 months of this channel. And if stocks do take a sudden bad turn tomorrow, then we could just break down into this channel and even go further down. Just something to be aware of, okay? Where maybe this was just kind of a fake out. Let's see, on the weekly. Yeah, on the weekly, it would just look like a wick, and then we would just continue going down, sort of like we've had wicks, to the downside, and then we pop up. This could turn into a wick that we just popped up, and then, we started to head down. So it could just be kind of the reverse of something like this. And that is possible. It's not likely, but it is possible. So I just make sure that I'm presenting it for you guys. So again, just consider where you want to take your profits and where you want to put your stop losses and understand the possible path that Bitcoin and stocks could take depending on what the VIX and the dollar do tomorrow. And then let's go ahead and take a look at USDT. USDT is breaking down nicely. A lot of people thought it would get hung up on 6.6%, but it is continuing to break down. I would suggest that it could find support at 6.1, 6.15, and we're almost in that area. And then if it breaks down from there, then almost assuredly it'll find support at 5.35. Now this is the percentage of money that is in Tether rather than in crypto. So the more money that's in Tether, the worse that is for crypto because it means people took their money out of crypto and they put it into Tether, right? So if you're in the stable coin, higher is worse for the market. And so when we're talking about a potential bounce, that suggests that the market could take a hit, right? And so what we don't want to see is Tether bouncing right here. And if Tether starts bouncing tomorrow or this week, that's a bad thing. If Tether breaks down under this support that I've marked out, then that's a good thing. And if it finds support down here, then maybe we deal with that later. Okay. This doesn't just fall straight down. You can see it kind of chops its way. So it should find support at some point. And then crypto is going to take a pullback when that happens. But it is falling quite nicely. So this is quite a nice relief to the market. And we just hope that it continues, but as with all things, it can't continue forever. And if we start to see it turn around, it's just not going to be good for the market. So it's very similar to the dollar in that regard. We don't want to see Tether, we don't want to see the dollar, and we don't want to see the VIX going up. All right, guys, that was your Workshop Wednesday. That was your alpha for the day. Stay safe and happy trading.